the majority of the time, outside of a recessionary event-driven markets, 50-day crossovers below the 200-day, the dreaded death cross, are typically more commonly associated with market lows than they are the beginning of a corrective cycle. Here's what you need to know before the bell. Markets have been, basically trying to recover from this recent low. We're on a very short-term buy signal. Markets are not really overbought here yet. So again, we can certainly see a bit more consolidation through this period right here. And again, I would not doubt that to any great degree, particularly with this crossover between the 50 and the 200-day. You want to be careful here. A lot of headlines. This is in today's daily market commentary. I have a chart and some analysis going back on these 50, 200-day moving average crossovers. The majority of the time, outside of a recessionary event-driven markets, 50-day crossovers below the 200-day, the dreaded death cross, are typically more commonly associated with market lows than they are the beginning of a corrective cycle. So again, you go back and look at the Euro crisis, the Brexit, you take a look at the end of QE1, the end of QE2, all those things. There were very short downturns of the markets below when that 50 and 200-day moving average crossed over, and then markets began to rebound, and then the 50 to 200-day crossed back up again. So unless there is a recession or some credit-related event within the markets, these tend to be fairly short-lived, generally 3 to 4 months. And then they begin to recover and begin to move higher, and those crossovers reverse in direction. Again, just kind of watch this, but it does provide overhead resistance. It does suggest that markets will remain consolidating here for a bit longer. We're not going to go running back off to new highs anytime soon. But it also suggests right now that we're probably, at least considering the extreme negativity that we're seeing in the markets in terms of sentiment, positioning, etc., that we may be more in the process of creating a low in the market rather than the beginning of a longer-term downturn in the markets. Now, again, that can change. And if it does, we'll certainly adjust as we go. But again, we want to look at the data and pay attention to positioning and understand what the risk is here in the markets currently. But don't get too tied up with these crossovers. They tend not to be as bearish as a lot of the headlines want to make you lead, or will at least lead you to believe. That's what you need to know before the bell this morning.